So hi and welcome to the channel. So today we're going to talk about 5 mistakes that Zambians are making when beginning investing in cryptocurrency or even ordinary stocks. So now these mistakes I'm going to talk about, I've done some of them and I've seen my colleagues also make the same mistakes over and over and over. And now I would like to share that with you so that you do not have to make these mistakes and you can carry on in having successful trades as you invest. Now let's get right into it. So the number one mistake that I made as well was what we call FOMO. Do not FOMO. FOMO simply stands for fear of missing out. So you need to learn how to fight your psychological instinct to buy or invest in stocks or cryptocurrencies when you know or when you see that the markets are actually going up and they've been parabolic that particular day or month. By parabolic, I simply means that the price of the stocks or the cryptocurrency has been going up. And then now you have a fear of missing out. So you quickly want to just jump in because you feel like the train is going to leave you behind. So you need to stop having this particular psychological drive to FOMO into stocks or cryptocurrency. Always do your research, wait for the markets to correct, and they will correct. There's no straight line up. There is always a line up, then it corrects, and then a line up again, then it corrects. Wait for it to correct, and then maybe that's when you can invest into that particular asset. You need to understand that when you FOMO, this is where you find that you invest in this particular stock or a cryptocurrency, and immediately you put in the money, then it corrects, and that's when now you see that your investment has gone down simply because you FOMO'd in. Now the people that were in the trade early or who had bought the stocks or the cryptocurrency early are able to realize the profit. But however, for you, you're not able to realize your profit, but instead you lose on your investment because you simply jumped onto the bandwagon. So remember, what's important is for you to do your research first. Do your research first. Check the graphs of that cryptocurrency. See if it's in a parabolic run, or see if it's been having continuous green days. Wait for a correction, and the correction will show up. That is when you have 2, 3, 4 red candles, and that's probably the best time for you to invest into that. Now, if you want to know the best investment strategy to fight this particular mistake, I spoke about it in the last video. It's called the Kwacha average costing. And if you want to learn more about how to do the Kwacha average costing, I'll share a link either below in the video, or I'll show a pop-up here somewhere in the video on the video that talks about Kwacha average costing. So the second mistake that most Zambians make when investing in cryptocurrency or stocks or any other intangible asset is that they do not diversify. Most Zambians would invest in one particular cryptocurrency and expect it to be the currency that gives them all the returns or the best returns no matter what, come rain, come sunshine. So what you need to understand is that in as much as you would have faith in one particular project in the cryptocurrency industry, you need to have diversification. This will enable you to have to be able to protect your investments and also have somewhere to fall back on in case something goes wrong with one particular investment. A good example is Dogecoin. Most people invested in Dogecoin, and some people took out loans, or let me say not some people, some friends took out loans to get into Dogecoin. Now remember, I spoke about the first mistake being FOMO, fear of missing out. So they took out loans and invested or bought Dogecoin, waiting for it to go up. And they were expectant that once some famous person tweets about it, immediately Dogecoin will go up. Unfortunately, Dogecoin did not go up, and that's the only coin they invested in. In fact, it went down, and they lost most of their capital that they had actually put into this particular investment. So if they had spread their investment over different reputable coins, definitely they would have had something to fall back on, because one particular investment, or in short, I'm sure you've heard of the saying, never put all your eggs in one basket. Well, this is it. Do not invest in only one particular item in your portfolio. Now, even as I say this, I need you to remember that there's also a thing called over diversification of your portfolio, where you invest in so many coins that you cannot even realize proper profit once one coin actually outperforms the market. So you need to know that on average, I think it's good to have maybe just under 10 coins that you heavily invest in. I think that's good diversification. Then once you get to understand how cryptocurrency works, you can now invest in maybe 15 coins, then you bump it up to 20 coins, then you bump it up to 25. But I think going beyond that is a bit too much. I myself, when I started, I over diversified. I had multiple coins in my portfolio, and I would share the little investment capital over multiple coins, so much that when one actually performs very well, the amount of profit that would realize for my portfolio would be so small because there are just so many coins. But then if I had just carefully sat down and selected top 10 coins and invested huge sums of money or reasonable sums of money in them, you'd find that even the returns would definitely be better than having a portfolio that's worth over 25. I think at the peak, at one point, I had more over 30 coins. And what you get to understand is that if you have over 30 coins or 30 cryptocurrencies or projects that you've invested in on the blockchain, you find it very difficult to keep up with the news, because every project has its own news, its own Twitter account, its own Telegram account, its own Instagram for some of them, its own Facebook account, and of course the actual official website. So you need to keep your portfolio in such a way that you're able to manage to follow on everything that's actually happening within your portfolio in terms of your investments, so that you're able to make better decisions. Do not over diversify. So now the third mistake that I made and that my colleagues made is that we did not take profits. You need to take profits. If you take, for instance, the Binance coin, BNB, I had BNB, and before the market correction somewhere in May, I had quite a large amount of BNB in my portfolio. But then I did not take profits. Even as it went up, I kept telling myself it to go up, it to go higher, probably to go higher, definitely to go higher. And then one night I woke up and it had lost almost 35% of its gains. And the next day it lost another 10% and we're down by 50%. If I had taken out some profit as the markets were going up, I would have definitely kept on some of that profit in my portfolio. Take profits. If a coin or an investment that you have, even in stocks, goes up a specific percentage where you're able to get out your capital, get your capital out of the investment and leave the rest. Now that is the profit. Leave the rest to be your investment at that particular time. The same applies for cryptocurrency. We call it a moon bag. Get the money that you invested in, see it double. Once it's double, get the money that you invested in out, and then leave the money, which is now the profit, to also grow. See if the project keeps on growing and growing. We call that the moon bag. That's the best way to invest in cryptocurrency. Do not sit there and think the markets will always perform in your favor. They will go up, but boy, do they come down. Now, before I talk about the fourth mistake that I made and my colleagues made when investing in cryptocurrency, I just wanted to reach out to you. If you like this video and you like more videos, you would like to see more videos educating you about cryptocurrency investment, please click like, tap on the bell icon so you get notifications as soon as we or I upload a new video to the channel. So now let's get right into it. Number 4, paper hands. Most Zambian investors have paper hands. What does paper hands mean? It doesn't mean that your hands are paper. No, not really. Now, paper hands is where you do not have the patience to wait for the investment to grow. Now, paper hands simply means you have weak hands, okay? You're not able to wait for the stock or for the investment that you've made to actually mature, you're too quick to react. The moment you hear that, oh, it's gone down 10%, and you instantly want to sell the stock and get back your money. But what you need to understand is that volatility is actually your friend. The more it goes down, obviously the more it will bounce back. That's how volatility works, or that's the price that we pay for the proper performance of cryptocurrency. So you need to learn to exercise patience when you invest in a blockchain. When you invest in cryptocurrency, you need to have patience. Without patience, you will not be able to sustain a growth of your portfolio. So I myself have been through multiple dips. I have to be honest with you here. I did sell some of my investments in my portfolio when the markets did not perform well. But the reason I did that is probably something I'll discuss in the next video. But long story short, I felt that the projects did not have a prosperous future given what I had researched about them. So when the markets went down, I did not expect them to go back up. But in most cases, do not exercise paper hands. You need to show your resilience and you will be rewarded. When the markets are down, that's the best time to buy. When the markets are down, a red day is a good day in cryptocurrency. See the charts are red, that's the best time to invest. When the charts are green, take your profit. Fifth point, or the fifth mistake that I made early on in my journey when I started investing in cryptocurrency, and some of my colleagues are still making actually, is that there's an element of forgetting to take care of yourself. Now you get so caught up in all the bustle and hustle of cryptocurrency and constant news and media covering specific projects that have been launched and someone who's becoming a millionaire. You need to take time out to actually take care of yourself. Shut down that computer. Sometimes just close that phone, close that app, and go out there and get some fresh air. It's a new dawn. Very important. Very, very important. Go out there, live a little. None of this is going to be possible for you to enjoy if you do not take care of yourself. So it's important that whatever you do, or wherever you make your investments, do take care of yourself above all else, so that you can actually get to enjoy the sweet, sweet, sweet gains. Now, if you like this video, one more time, please do leave a comment below. If you've got any advice you'd want me to, take on from you, please do leave it below in the comment. Like the video, tap on the bell icon so you get the notification for the next video once it's up. So these are my 5 mistakes that I've been making, that my colleagues have been making, and you shouldn't be making. So I'll see you in the next one. Peace.